Hey guys, welcome to another video and thanks for clicking on this one. In this video, I just want to share a few things with you as we've seen the stock market perform today. At the recording of this video, the Dow is down about 300 points. So is the S&P, and of course the Nasdaq is slightly down. However, NVDA is carrying Nasdaq index. Now, one of the things I want to say is that, as I mentioned in my video on, I believe, yesterday and even on Sunday, I mentioned to you that one of the things that we want to watch out for is the CPI report. And that has definitely taken a bite out of the stock market today. Now, to be honest, it's not surprising because most of the numbers were somewhat expected and they are not something that was unexpected. Hence, the reason why the stock market didn't fall drastically. But this has presented some opportunities for some of your favorite stocks. Now, one of them, like Tesla, is down. We have another one is Apple, slightly down, not much. But one of the ones that if you've been holding, I'm sure you've seen a lot of gains on will be NVDA and AMD. These two stocks alone, excuse me, have gone up a lot. Why? Well, according to the CEOs of these companies, they've met with the president, and I guess with the tariff negotiations, one of the things that they are going to now do is to continue exporting some of their chips. Although some of the US government officials are claiming that these are not like the latest generation chips, but the point here is they are going to resume exports of those chips to China, which is a good thing for the companies because they will end up making a lot more money. If you guys remember back in, I believe, April and May, when all this conversation about chips export control was ongoing, one of the things that the CEOs of these two companies mentioned was the hit they're going to take. And when I say the hit, I'm talking about the drawdown in their finances they would experience due to this tariff restriction that they had in terms of exporting to China. So that has definitely is a big catalyst in the stock market now, seeing that these two companies can resume exporting this latest chips, quote unquote, to China. And the stocks at the time of recording, AMD is up around 4%, and it's selling for 155 per share, and NVDA is up around 6% or so, and it's selling for around 170 per share. Now, what am I thinking of at this point? One of the first things I would like to say is, if you're somebody who holds, say, NVIDIA or AMD, and you probably hold a lot of them, it's definitely worth, checking your portfolio, seeing how well you are diversified or balanced in your portfolio. One of the things that I've shared on this channel, if you've been following this channel for some time, for those of you that watch the videos, even though I know that not a lot of people watch these videos, but hey, I enjoy talking about these things because it's worked for me, and hey, I'm sharing the knowledge, and of course I'm willing to learn as well. So anyway, let's get back to it. One of the things that I would say is that you should consistently rebalance your portfolio, especially when you see huge gains like this. And what does that mean? So let's assume that you hold NVIDIA shares and AMD shares, and you are up, let's say, 30-40% in, for example, my NVIDIA, I'm up around 40-something%. Now, and I've sold some of my shares over time. Why am I selling though? Not that I don't believe in NVIDIA long term, but the reason why I'm selling is to keep my portfolio a little balanced. One of the things I try to avoid is to have up to 10% of a particular company in my overall portfolio. So let's assume that you have a $1,000 portfolio, for example. You want to avoid having $100 or more in a particular company, because that means you have up to 10% in one particular company, and if something goes wrong with that company and they lose their businesses or whatever due to tariffs, for example, well, that portfolio can see a huge decline just in one day. And that's why I try to avoid having up to 10% in my portfolio. That is just personal number for me. Yours can be different. Yours can be 5% in a particular company, or it could be 15% or 20%. But at the end of the day, let it be a well thought out number. Now, 10% reason is because if I have less than 10% in some of these stocks, what will happen is that it may take a long time for the portfolio to also grow. Remember, without taking risk, you don't get reward, right? So you have to be willing to take some risk, but in safe companies. When I say safe companies, companies that are likely to be around for a long time. And these are like the companies like the Metas, the Amazons, the Google, the Microsoft, right? This Apple and the likes, NVDA, of course. And these are companies that I believe that long term they can do well. They have the financial capacity, they have the technological know-how, and all that stuff, right? So I'm willing to hold those ones more up to that 10% limit. However, not all the stocks I hold will be 10%. Some are in the 3% range, some are in the 1%, some are in the 2%, right? The point here is you have to have some number to work with. And I am okay to be slightly heavy on the NVIDIA's, Apple, Microsoft, for example, than some of these other risky plays, like, for example, Rocket Lab. Now, I'm not saying that Rocket Lab is bad. I talked about that in the video. If you haven't seen that video, check it out. Maybe I will link it in this video, but it's the video that I made yesterday. So the point here that I just want to pass on to you is that check your investments, check your portfolio. Make sure that you're not too heavy on companies like NVIDIA. Why? Because now we've seen these very nice gains. It is okay to go and look at your gains and make slight corrections if you think you're too heavy. That is how you can consistently make profit long term. This is not a one-time thing. This is something that you want to do for a very long time. And if you are not willing to make sacrifices, understanding that yes, NVIDIA may keep going up to $200 or $250 or $300 or maybe even $1,000, but as long as you're well balanced in your portfolio, you are going to be able to keep that portfolio for a long time. If you become too heavy, well, if NVIDIA takes a dump tomorrow, well, you would end up losing a lot of money. Now, the other thing to keep in mind is in the process of balancing your portfolio and managing this, one thing to remember is that you want to think about your tax consequences, especially if you hold in a brokerage account. If you hold in a retirement account, like a Roth account, for example, sure, you may not have to really worry about this factor that I'm about to talk about. But if you are in a brokerage account, one thing to remember is that it is best to sell the stocks or the shares that you held for more than a year so that you pay long-term capital gains instead of the short-term capital gains. Short-term capital gains is generally more over the long-term capital gains, and with that you can save money. Okay, so what I do is that I use Robinhood. I can sell based on tax lots. And what are lots? Lots are pretty much the shares you bought at a particular period. So let's say you bought 5 shares 2 years ago. Well, those 5 shares are what I will be looking to sell now because they will taxed at a long-term rate, which is favorable for my tax position. Now, I'm not a tax advisor. Of course, consult with your tax advisor or tax professional when you're making these decisions. And to be honest, you have a lot of resources online. And of course, if you're watching this video and if you've watched this point, please don't forget to drop a like on it. It goes a long way. I just wanted to share this information with you. And one thing to remember is that going into tomorrow, we have PPI, Producer Price Index, coming out. Now, this generally doesn't impact the stock market as much, but it could be a factor that adds to, what we're already experiencing. There's a probability that this number will be slightly higher or at least meet expectations. And if that is the case, we could see a sluggish market again tomorrow. A few other things. We have the crypto week this week. And I just saw an headline, which I haven't really got into the details of that the Trump-backed crypto policies didn't fly with the Congress, right? So we don't know how that will play out, but crypto is definitely another one to consider adding to your portfolio because you just never know how this would perform long term. We've seen steady gains, although very volatile, but at least it's been quite consistent in the gains for crypto, especially Bitcoin and other altcoins as well. I wanted to share this information with you. For fun value in this one, please don't forget to drop a like on the video. If you've stayed up until this point, thanks for watching, and I'll see you in a future one.